Introduce myself, and we've got 4 panelists here today. I'm going to let them introduce themselves, but joining us, we've got Eli Biano from the Bolster Growth Cap Group, Neil McMillan from Express Business Funding, Lakvir Jaj, he's the founder and CEO of Moselle, and Ian Duffy, founder and CEO of Accelerated Payments. And I think these guys are Toronto, Vancouver, Dublin, kind of all over the place right now. So very happy for them to join us. Maybe we could start with you, Neil, give a little bit of background and introduce yourself, and then we'll move on.
Sure, thank you. So my name is Neil McMillan. I'm the president of the Express Business Funding in Canada. Our business is been in Canada for just over 20 years. We specialize in receivables funding and also import finance.
Thanks, Neil. Can maybe we turn it over to you, Ian?
Hi, yeah, my name is Ian Duffy. We're based in Ireland, so I'm currently in Dublin, hence it's dark outside. But we have businesses in Canada, in the US, and in the UK and Ireland. So we operate across the Atlantic, and we fund invoices, individual invoices, from 20,000 Canadian dollars up to 5 million. And yeah, we'll tell you more about the business as we go through the webinar. Looking forward to it.
Thanks, Ian. Lakvir?
Hi, everyone. I'm Lakvir, the founder and CEO of Moselle. We have a little bit of a unique business where we really help businesses with supply chain management tooling and getting them onto a platform, and then kind of give them access to alternative financing and connecting them to lenders in Canada and the US.
Thank you. And I think, Elias, you're our last one here.
Hi, everyone. I'm Elias Biano, founder of Bolster Growth Capital. So we've been around for just about a year now. Previous to that, I spent the last close to a decade with Export Development Canada, and our main focus is with purchase order financing.
Thanks, Elias. Maybe my first question, and this is useful to me, and I hope some of our other attendees. Maybe, Elias, you could tell me a little bit about what PO financing versus trade financing versus factoring is. I think might be a good idea for us to get a little bit of background on what these terms are. I know the internet uses them interchangeably. So if you can give us a little light on that, that would be great.
Yeah, absolutely. So thank you for that. Really, you're right. A lot of people do use PO financing and factoring interchangeably. And really, the simplest way I can put it, and I'm sure others can add to this, is PO financing and factoring are at different stages of the transaction. And the way I position it is pre-shipment and post-shipment or post-delivery financing. So purchase order financing will actually help you with the cost to pay your supplier upfront or upon shipping. And then the factoring side will, and that's usually, the purchase order financing could usually do up to 100% of your cost. And then on the factoring side, once you've delivered and generated the receivable, you then discount that receivable and you get the cash flow paid, and you assign the receivable to the factoring company. And that usually, correct me if I'm wrong, guys, is up to about 85 to 90% of the value of your receivable.
So do you offer both sets of financing? And maybe Neil, you can answer that. I know everybody's company is a bit different, but.
Yeah, so we call ourselves a cradle to grave funder, essentially. And what EBF does, which is slightly different to the others on the panel, is the EBF will actually purchase the goods on behalf of the client. So the client will, instead of paying a deposit to the seller of the goods, they pay the deposit to EBF, and we physically buy the goods. And then when the goods are loaded onto a vessel anywhere in the world, we then invoice our client in Canada for those goods. And so the goods basically can move across the world, and the client has up to 120 days to pay us back. Now, if these goods are brought into Canada or the US and subsequently sold to, say, Costco or one of the big corporates, what we then do is we buy that invoice and we pay the import finance piece out. So essentially, we fund the goods from the minute they are loaded onto the vessel right to the point where they're delivered to the end user.
Great, thanks. And I think, Latvia, you're sort of involved in this end of things too as well. Do you want to maybe shed a little light on that?
Yeah, sure. I think we operate very different from everyone else, where we don't even operate a fund and deploy out capital. What we do differently is we kind of flip financing on its head, and we work really close with the business and business owners and provide them tooling and get really into the nitty-gritties of their supply chain, and then kind of surface up what's the best option. So, we work with business owners that, might be a better fit for PO financing or a better fit for factoring. And so part of that is working through the tooling. We can surface up data and information about the business and really give them the best insight and direction of which path to take.
Cool. So do you actually then shift business to some of the other panelists then?
Yes, we do exactly that. We shift over business to a bunch of the panelists here. We aren't financing experts. We love to, part of our mission is we are the small business owner, working with them and try to act as a broker.
Okay. And Ian, how does that differ from what you guys are doing at Accelerated?
Yeah, so Eli described it well. We're at the other end of the transaction. So Neil and Eli and Latvia, we're talking about the purchasing end, the stocking end, the value add. So we step in typically when goods or services have been delivered to a buyer and invoices have been sent, and the buyer is going to take 60, 90 days, 120 days to pay, and the supplier wants to get paid straight away. So that's what we step in at that point. And as Eli said, we offer 80-85% advance funding on an invoice, and we would buy it on the day the invoice is issued, and it saves our client having to wait the 60 to 90 days to get paid.
Good. So I think, what you guys are all saying here is that you're offering sort of a different type of solution for various types of small and medium-sized business. Is this different than the big bank services that are being offered? And maybe, Neil and Eli, you can speak to that.
Yeah, most of the banks require some sort of security from a client. So the banks traditionally will put up a letter of credit, and a letter of credit needs some sort of cash deposit behind it. And so that's really restrictive for an importer, especially a little baby importer that's just getting up and running, and they're trying to do the first couple of trades and they're just trying to get some equity into their business. So that's really restrictive. So with our products, we are unsecured, so we are taking the risk entirely on ourselves, and therefore that certainly helps the little guys get up and running, and as they can grow and our facility grows with them. So it's a lot more flexible than the banks, but of course the banks are, once a client is really established, and we're in the tens of millions, it's kind of probably more where the banks are more interested. I don't know, Elias, if you get something else to say on that.
Yeah, I would echo that, in that the banks are going to look for several years of profitability and experience and so on, and then put a full security agreement together. So we can either help companies earlier in that stage, where we'll look more at the transaction, we'll analyze the transaction and the risk of, the biggest risk for us is purchase order financing is not just the end buyer, but rather your ability to deliver on this contract. So understanding your managerial experience to make sure that you will be able to deliver, that's something we'll analyze, even if it's just for one purchase order, right? Where the bank wants a sort of a long-term relationship. And when it gets to a point where a company is with a bank, oftentimes that operating line is margined on receivables and inventory. And so to access your cash, you need to have those assets to margin. And so for pre-shipment funding, we can still help those companies alongside their bank.
So my next question is going to be talking about accelerating growth in your industries. But before I get to that, maybe we can dive in a little bit into technology, how you guys are using that in your various businesses. I mean, it sounds like this is pretty due diligence heavy. I mean, maybe that's because I'm a lawyer and this is sort of always a focus of mine, but I mean, it sounds like without the security and the traditional sort of package that you'd get like a big bank would, that you guys have quite a bit of due diligence that you guys have to run. Is technology becoming a factor in that sort of stuff? Does that streamline things? Lackier's nodding.
Yeah.
So he's getting this question first.
Yeah.
But I would love to hear what everybody has to say on this, because I think that's going to be very interesting.
Yeah, I think I was just nodding my head because the industry's changed a lot. And I'm by no means a trade finance expert. I'm more of the technology head in this panel. So that's why I was shaking my head. But, you know, the big change that I see in the industry is the biggest piece is data aggregation. You know, businesses are basically have APIs now to all their data sources. So it's easier for like Moselle to plug into accounting data, our own proprietary data with, you know, purchase orders and their trade workflow, and then also banking data, you know, with, you know, tools like Plaid, and is making it more easier to aggregate this data and build a package and profile about a business that wasn't possible before. And that's relatively true for all these other businesses on the panel as well, lenders, that we can get access to that data and provide a very comprehensive picture into these small, medium-sized businesses.
Yeah, I think that's one of it is a game changer, Lee, technology. I mean, so in the last 12 months, COVID has just turned the industry upside down. I mean, can you imagine even two years ago thinking of an entire bank being staffed outside of its premises remotely? So everything is now online. We're funding clients we've never met in person. Again, kind of unthinkable even 3 or 4 or 5 years ago. And now that's just the norm. And then, as Lackfear rightly says, we actually can streamline the process. I think you mentioned the main banks. I think one of the issues the main banks are facing is that the ability for them to do a 50,000 or 100,000 transaction is becoming harder and harder every year because you have to be so efficient and technology heavy and light, like cost light, to be able to do those transactions. So we're receiving 80-90% of our information online now and making a decision, and we see over the next 12 to 18 months that continuing to automate as a function.
So question for you, Ian, does everything get signed electronically now?
Yeah. So, and I was, as a lawyer, I would be interested in your view. I mean, it seemed impossible 12 months ago, but then suddenly it all became possible to sign everything electronically. And it just shows what an impact COVID has had. I mean, there's been a lot of very negative implications, obviously, but there has been a lot of positives, and certainly streamlining of processes has been one of the major issues out of it, and it's now very efficient, and I don't think it'll go back. Hopefully, as we all evolve out of this pandemic over the next 3 to 6 months.
Yeah, I don't disagree. I mean, I think as a lawyer, I'm actually looking for ways always to keep things simple and save time. So electronic signatures has been a godsend, because we close transactions now entirely online. What about you, Neil? Are you seeing like COVID and maybe not just COVID, but technological changes? No doubt the pandemic has had an enormous effect on your business. How is it pushing you guys forward better, and maybe you can tell us some of the negative sides of this too?
Sure. So I think we are all kind of in the lending space, and our comfort zone is being able to go out and meet a client and look him in the eye and decide if we are comfortable with the guy, or whatever. And because of not being able to do that, it's just been a massive paradigm shift in who we are, because we are now meeting people online. We're not able to walk around factories anymore, and we're making decisions that we would never dream of doing this time last year. So I think that I think this COVID thing has actually taught us a lesson that perhaps we can trade with people without having to go and kick the tires. I think in terms of technology, I think that what the industry is screaming out for, which is something Latvia has pulled together, is a one-stop shop. Because a lot of the little guys who are just starting out, they don't really know what a bill of lading is. They don't know about marine insurance. The SGS, in terms of getting goods checked to the port to make sure that what goes into the container is the real thing. And so a lot of these guys just don't know that stuff. And I find that the people I'm speaking to are asking me these questions. And I think that if there is an education portal somewhere whereby clients can then click into other providers like insurance providers, marine insurance providers, I think that that's where this industry needs to go.
And what about you, Elias? What's your take on COVID and the technology stuff that's coming around your business these days?
Well, so for me, technology, we started the company in the middle of COVID. So, I mean, that's the only way we've been doing business, really meeting people online and trying to get to know them that way. We are trying to leverage tools like Moselle, as you mentioned, that Latvia mentioned, they send us some leads because it helps sort of aggregate the information. The longest part of our due diligence process is the gathering of documentation and so on. And so this sort of one-stop shop helps expedite. But the one thing COVID did for sure is bring in PPE leads.
Totally.
At least 5 a day.
Yeah. So would you say that technology is almost taking the place or sort of having to like bootstrap trust? I mean, Neil mentioned having to meet people in person, doing factory site tours and things like that. If that's not possible in today's world, and Ian, you said that, you're kind of hoping that we can see some of these efficiencies moving forward. Is the trust that you build in person on those site visits and stuff somehow being bootstrapped by the technology, or are you guys just taking bigger risks?
No, I think
you can start with that.
I think the fundamentals of finance will always be the same. They're the same as they were 100 years ago and the same as they were 2 years ago. A lot of what we do is trust. The only difference, as Neil says, is we're building relationships now over by video. And you have to work at that. It's harder, particularly if it's somebody that you don't know, to get to know somebody over video. But it's entirely possible. And then probably fraud is a bigger risk for everybody in finance these days. Probably a bigger risk than the actual credit risk itself. And fraud loves online, so there's a whole new world which we have to take on and address and ensure we mitigate, because and again, part of the technologies we use is using technology to eradicate fraud to the extent that you can. You never get it to zero, but you're always seeking to achieve that. So I think that's very much the trend. The fundamentals are still the same. You're just using new processes and new ways of executing those. Right.
Maybe what about blockchain? Does that help or hinder? And are any of you guys using this in your products and the services that you provide? Do you think it's something that you might adopt in the future? Maybe I can throw those questions out there, and Neil, would you like to start?
No.
You can pass that off. Maybe Latvia, he's really good on the technology side.
Yeah, for sure. I can jump in on the blockchain side of things. I think it's there's people on this call. I encourage people to take a look at some of the new trends that are happening in the industry. Look at things like DeFi, Compound. These are online blockchain decentralized lending platforms. And what blockchain, I believe, will really help with is creating access both for lenders and borrowers. It's easier for a borrower to go on to these platforms and get the capital that they're looking for. Even with these platforms, they're much smaller than the sizes that typical lenders do. But then also on the lender side of things, you can have anyone become a lender. And that's kind of this great equalizing effect that blockchain does. But what it doesn't solve is the underwriting and the risk.
Correct.
So like you can have an invoice, you can securitize it potentially on the blockchain, but someone has to make that decision, whether it's decentralized or centralized. It's really up to how it's underwritten and who's looking at the risk and who's saying that this is a valid invoice, right? And so that the blockchain today doesn't solve. So I think separating those two things really helps understand why it hasn't really come into this particular industry yet, but it's coming. It will eventually come there.
I think, Lee, it needs to become ubiquitous, which it will eventually. Because it's a very precise ledger system of verification. So guess what? That's really good again for verifying and avoiding fraud. I think it needs to become more accessible though. So for startup technology companies like ourselves, we're 3.5 years in business at this stage. We think it's something that needs to be on our radar in the future, but we don't need it to do business just now. And so many of our clients are not going to be enabled by blockchain. If we went that route on a centralized basis, we would have more. We would be turning down clients because they don't have the relevant technology. It will come though. I do personally. I believe it will become very much part of the fabric of trade finance because it's an accurate and precise system for accountability.
Right. So, I mean, am I right to think of blockchain in your world as basically a really secure filing system, but you still have to put the inputs, and as Lapierre said, somebody's got to make a decision as to whether or not you're going to finance that invoice or whatever.
And as I understand it, you need both sides of the transaction cooperating on that. So that's the challenge. And as Neil rightly said, most of our clients are small businesses. They're actually really good at what they do. So the products or services they provide, that's their expertise. They're not necessarily, and typically aren't experts at finance and IT, at some of the more complex processes that that exist in the cloud. But they're very good at what they do, which is why they exist.
Right. What about you, Eli? Do you see this blockchain as something that you guys are going to start using, or are your answers somewhat similar to the rest of the group?
Yeah, it's very similar. It'll be a sort of a tracking system for us. And for us, it would be important because a big portion of whether or not we're able to approve a deal is how often you've been able to deliver on something like this. What is sort of your track record? So I do see it being very helpful for us. Just right now, we aren't really using it.
Okay, so I mean, I don't think you can mention blockchain these days without also referencing Bitcoin and cryptocurrencies. And question for you guys, like, are you accepting or thinking about starting to accept payments for services and stuff like this in Bitcoin? Is that, or another cryptocurrency, is that something that's on your radar?
I can jump in. Yeah, like for Moselle today, there isn't a way to accept cryptocurrencies, but it's definitely on our radar. If I were to look at the industry, I think it's like Andrees Horowitz, the VC, that I think he just recently did like funding for startups using crypto, and there's this use case of especially cross-border payments and global payments, and it's much more faster and efficient to wire money through cryptocurrencies from one end of the globe to the other in an almost instantaneous fashion, versus we talk to small business owners and medium-sized business owners that import products from Africa, and they talk about the pain points of using Western Union and wire transfers and this delay in time. So there's definitely a powerful use case there to help with payments, especially on a global scale.
Yeah, and I would think like the more sort of developing those countries are, if their bank system can't be trusted, from what I understand, cryptocurrencies are much more palatable to those people, because if you don't have a banking system that works, then cryptocurrency offers you another way to do business globally. So maybe if you guys are dealing in those markets, you'll see more pressure to start accepting this. What about Ian, Neil, and Elias? Are you guys looking at, is Bitcoin and cryptocurrencies something that's becoming part of your, discussions with customers, or is it still one of these, burgeoning sexy news stories, but not a whole lot of implementation?
Sorry, go ahead, Neil, go on.
Yeah, just going back to what we were saying earlier, a lot of our target market is probably just not that sophisticated and developed. But I think it's a direction that the industry is heading in anyway. In terms of, as I said earlier, EBF, we actually purchase the product for the client, and most of the product that we buy comes from China, and we actually have boots on the ground in China. So we have people in Beijing and Hong Kong, and we've also got people in Melbourne, Australia. I think actually one of them is actually on the line at the moment. And so we actually fund locally. So when we buy product, we actually use a local agent funder, and normally it's US dollars, because if it's coming from China, China only want to hear US dollars, So, yeah.
Yeah, just I think it is part of the future, but we really don't come across it. And a bit like what Neil was saying, our clients are pretty straightforward. They know the services, our products that they provided to their clients. They want to get paid in their local currency. We can take out the FX risk. That's not an issue. We're already dealing in Canadian dollars, US dollars, sterling, and euros, and Swiss francs. So. And as Neil rightly says, most things are priced internationally in US dollars now anyway. So it's not something that's pressing at our door just yet, but I think you're right at ease of transactions at some point. And also I think cryptocurrency has some journey to go in terms of becoming a credible, trustworthy source, which is probably not there yet.
But I don't know what we're at today, but I think the last I looked, a Bitcoin was worth $71,000. So if there's a finite amount that.
I was going to say that there's a cryptocurrency pegged to the US dollar. I think it's a USD,
okay.
And it's basically one crypto coin on that cryptocurrency is pegged to the US dollar, which is super compelling and interesting in the world of trade, where a lot of things are pegged to the US dollar. Which is something worth looking at. Take a look at it as well.
Is that Ethereum, or is Ethereum pegged to the dollar? I thought it was, but I mean I could be going on a tangent there. We don't need to go into it. What about other accelerators in the industry? So I mean, COVID might have been an accelerator for your business. I'd be interested to hear that. Are there regulatory issues? Trade deals between countries that are becoming interesting to you guys? What are some of the things that you're looking at that you think will accelerate your industry, and you'll see some growth areas in the future?
Yeah, look, one of the big changes last year was in the UK coming out of Europe, and I think that a lot of the trade that was done with Europe is now moving to UK, North America. And so we are starting to see a lot more interest from UK exporters where we didn't see before. And I think that there's also a Canada UK agreement being formulated at the moment. And I think that when that comes across, I think that's going to oil the wheels of more trade between those two countries as well.
Yeah, so we've also seen a significant uptick in overseas business, international business. So even though we're an Irish company, about 2/3 of our book is in Canadian dollars and US dollars, and most of that is UK clients into the US or Canada. So I think, look, the world is shrinking, as we know, every day, every week, every hour. I think the other interesting point you mentioned is regulation. I do think the main pillar banks in whatever jurisdiction are going to struggle more to provide services in the smaller size ticket, and I think that struggle is going to continue. As Neil rightly said, in the 10 million plus category, they're very, very good at what they do. But as you get below $1 million, euros, pounds, I think they struggle from an efficiency and will struggle more and more because they are large regulated entities with a reasonably high cost base. And I think companies like ourselves and others should be able to provide a much more efficient service to that smaller group. So actually, I think one of the other impacts I'm seeing certainly in terms of global trends is a lot of the regulators are now pushing to bring down barriers, typical banking barriers that might have existed in the past in terms of access to the payment settlement platform. In Europe now, for example, you can transfer to any of the 27 countries, I think up to 100,000 euros for 20 cent, and it's guaranteed to be delivered next day. You know, so I think part of the regulators can do is drive down costs where if it was left to the incumbents, they might stay elevated, and that's one of the trends we're seeing. Again, open banking is another trend where in the UK, I think they're going to adapt it in Canada as well, where again, it's giving access by permission to any amount of information in the cloud about a particular client at a click. Very powerful at providing the ability to say yes to an SME about an amount and quickly and give them terms and conditions online. So, and that's been driven by regulators, which is interesting.
You know, Ian, that open banking sounds very interesting to me. So just a little bit more on that. Does that mean that I agree to let my bank or whoever it is see whatever information I've got stored on the cloud? Is that? Yeah,
and you give that permission as part of the process of applying, say, to accelerated payments.
Right. You
know, for invoices. So it's a click. So you click, by clicking, you authorize us to draw your bank account details, which as Lackfear rightly said is an API call. And you can pull down information on the receivables from the cloud, from banking information. One of the anomalies we've seen in Europe, you're required to lodge annually. Every company must lodge a financial return. There's no such requirement as North America, but all that information's online and available in Europe. So actually online, you can get 98% of all the data that you need now. And I see that trend just continuing.
So it sounds from your perspective that really cloud-based stuff is going to be far more important than blockchain in terms of, you know, sort of pushing your industry forward. Would the rest of you agree? What about you, Eli? Do you have a comment on that?
Yeah, so my background is in credit insurance and stuff like that. So I've always been a big promoter of sort of, you know, thinking beyond just the US, because in my opinion, Canada is really heavily dependent on selling into the US. And so I think since 2016, with a lot of uncertainty, companies actually started looking beyond the US. And so, you know, I'm not super familiar with the open banking side of things yet, but, you know, with things like tools like credit insurance, where you could get a buyer approved before selling to them, you're able to kind of, there's not really a difference whether your buyer's in the US or abroad. And so with sort of the middle class and a lot of countries being able to buy goods from Canada now, I think people are going to start diversifying.
So Lackfear, do you have an opinion on open banking in terms of when we might see this in Canada?
Yeah, sure. I think for me, if I'm putting on my kind of futuristic hat and jump into the future a little bit, is again, earlier points around data aggregation and underwriting automation that, you know, Ian talked about is kind of the future, and what powers all that is data, and having transactional data, you know, coming in live as a stream to power applications and power lending is the future. And effectively, like, you can essentially reduce the overhead of lending tremendously by just having access to that data. And so open banking for sure is having that access will be very important. And I see like lending companies and lenders becoming almost like data warehouses, where they're aggregating all this data, they're parsing it, and they're trying to understand it and formulating some new insights into it that maybe their competitor doesn't have. So that's kind of the future, and seeing where it goes with open banking.
So maybe, but I think we've got a few questions here from the audience, so we're going to get to those. I just want to maybe close out or finalize with you guys my last question. We've talked about, you know, sort of technology and where things might go from an accelerated basis. What are the hurdles, the pain points that you guys see over the next while facing yourselves, your industry as a whole? I'd love to hear that perspective, sort of the negative side of things. And why don't we start with Ian, and then we'll work through the list.
Well, ironically, one of the negatives, it sums up COVID very well, is COVID. So what we are in a recession at the moment. A lot of industries are not on, there is a downturn obviously in the economy. Some sectors have been absolutely hammered, so working capital requirements are lower. And then really unusually, which there's no precedent for in the last 100 years, governments, including the Canadian government, have pumped a lot of cash into the infrastructure to good effect, I think, in fairness. But it's, our competition is now the government. So at some point, which is fine, but at some point that's going to need to come to an end. And I think that transition will start to happen over the next 3 to 6 months. So actually the last 15 months, although we've managed to grow our business, has been challenging from that context. But I think there's going to be another challenge ahead over the next 3, 6, 9 months as the market transitions back to the private sector for funding. And I think that market is going to have shrunk since 18 months ago. And it's going to be more risk adverse, and that's going to be a tough transition, I think, for SMEs, and a big challenge.
How about we go to Neil next?
Yeah, look, I think one of the pain points that we're experiencing at the moment is just unrealistic expectations from importers. So I know that Elias mentioned PPE recently, and the number of calls that we get with people who have maybe done one PPE transaction in the past, and now they want to get a funding line for $20 million, and it's just not realistic. So I think that when the economy opens up, I think there's going to be a huge market for opportunity for new importers. But I think people really need to set realistic expectations and learn to start modest and grow, as opposed to coming to guys like us and saying, like, I'm starting a new business and I want a funding line for 20 million and I need the money tomorrow, which is not unusual and obviously frustrating for us and frustrating for the importer.
How about you next, Eli?
Yeah, so I think I'm going to stick with what Neil was talking about, the PPE stuff. I think setting realistic expectation is huge. The other thing is there's a lot of companies that shifted away from what they were doing to fill the sort of gap for the PPE stuff. I'm interested in seeing how they're going to shift back to it, or if they're going to be sticking with it, and how that's going to evolve. Because also one part of financing something, you want to understand what the expertise is of that company and the track record on that. So flip-flopping back and forth may be a challenge as well. So I'm interested to see how that transition is going to go.
And Laffer, what's your thoughts on some of the hurdles that are facing your industry and some of the pain points that you're dealing with right now?
Yeah, so for us, I think a lot of the pain points we're seeing is, a lot of small business owners and maybe even some medium businesses are, feeling left behind. And part of that's, the shift to digital, especially under COVID, has, put strain on supply chains. And, business owners are asking us about, how do I sell online? And we're kind of rolling up our sleeves and helping them on their importing operations and supply chain operations of going digital. What does that mean? What does it mean putting my data into Moselle, and how does it help me get access to financing? And so we're really working, we're going as far as like helping business owners look up HS codes and understanding tariffs, so they can get that support. And then we work really hard to open up financing, even if it's small, so they can start winning and scaling up. And so there's these new crop of businesses being created now during the pandemic. They're going to need a lot of support, and those are a lot of the hurdles that we're seeing on our end.
Great. Well, I think those are my questions. We've got a few on the chat. I'm going to start going through some of the cues that we got from our attendees, and attendees, feel free to keep posting them. And I'm going to put a few of these questions together because I think they're on a similar theme. One of the things that the attendees are very interested in is, how are you combating fraud? One question was, that generally, and then another was, well, what do you do? How do you verify someone if you can't meet them in person? And then a third aspect to this is, does the real-time access to financial data, which maybe you're only getting, Ian, via the open banking that you get to deal with a bit, does that help you in combating some of that fraud? So I know we sort of talked about trust and stuff at the beginning and the lack of being able to meet in person. Do you still do verifications via Zoom? And then how else are you guys looking at preventing fraud in all of your businesses? And maybe we'll start with Ian. We haven't heard from him for a bit.
So I think it is the biggest issue facing companies. And as I said, in our view, it's a bigger risk than credit risk. So I think I think the key is to keep it simple and not get too complex about it. So we come across fraudulent transactions at least 2 or 3 times a week. They would have certain patterns, which, if you don't mind, I'm not going to say, but they're pretty obvious if you start thinking about them, in terms of how a company was set up, how it's recently configured. There are trends in terms of individuals and also types of businesses that will be targeted. So the key is to get your research right. Actually, again, I think the cloud and technology has helped access to data, which is better and often independently verifiable. So, where you might have done an on-site audit 3 or 4 years ago, you're now looking for independent data, that sits in a bank or it sits in a zero account in the cloud. So that can help. And what we do a lot through our platform is we do get independent verification from the buyers of the products or services that are being provided to our clients. So and again, they're not even aware that they're confirming that the invoices are valid, the goods and services have been delivered. So that's how you can use technology to make sure that you're mitigating risk. And then I do think, when the COVID does eventually lift, I mean, some of the old habits were good. Site visits will still, will still become relevant, and meeting people, particularly as exposure builds. You might need to do it day one, but as an exposure maybe gets up to $500,000 or $750,000, then an on-site visit would be justified.
Okay, what about you, Neil? Do you want to talk about how you guys in particular are combating fraud, and do you still do kind of in-person verification or via Zoom verification?
Sure, yeah. So so we do like to meet all our clients at least online and look them in the eye and make sure that they're answering the question that we would expect them to answer. But we also look at the other side of the transaction as well. So we look at the supplier, and because we have, again, boots on the ground in Hong Kong, Beijing, and there's a lot of data in that side of the world that's readily available. So we will look at the supplier and see if there is a relationship there before. And we'll also look at the ownership and try and figure out if this relationship between the buyer and supplier is really arm's length, or indeed, there is, more of a connection. Obviously, if the buyer and the supplier are one and the same, then, that would be a huge area for concern. So, one of the other things that we're looking for is a track record in this trade. So if the client has never done the thing before, whatever that thing may be, we're probably going to be a lot more cautious about it, because we want to be able to verify that the client has done a number of cycles in this before, and then this is just an extension of their business. And like Ian was saying, when we come to buy the invoice, we will verify that invoice as well to make sure that the goods did end up at the end user's place, and that they are happy with the goods and that they are going to pay for them.
So Eli, you were always in this business during COVID, so you probably had no pre-COVID system set up. your combating fraud is going to be the same today as it was on the day that you started. Is that kind of correct? Or and have Ian and Neil, you know, is there something that you want to add in respect of that? Like what kind of tools you use, how you guys combat fraud?
Yeah, I think it's they've covered it. It's pretty straightforward, you know, trying to get the right answers. My only sort of thing that I would look for is the more complicated the transaction is, the more unrealistic it's going to be that we're going to finance it. And so for example, some of the PPE transactions we've seen, you know, one person here in Canada is buying from a middleman, you know, in Europe who's buying from a Chinese supplier who's sourcing, you know, that's too complicated. So the more you can narrow that and simplify the transaction, the better it is for us as lenders to understand and get comfortable with it.
I mean, one thought, sorry, I was just going to say one thought, Lee, is simple stuff like your email platform. So we would see an email platform as being very vulnerable to fraud. In fact, you know, we had a fraud attempt. It was actually out of Canada, out of Calgary, where you are.
It wasn't me.
Obviously not related. Yeah, but it was, and it was somebody had hacked our email, and like it was never going to get through. But we would never transfer bank details by email because email is very, very exposed, and even informing people that is not a good, safe, secure system, even if it's Outlook or Google or whatever on steroids, it leaks like a sieve. So even informing clients about that and using alternatives that are secure is very, very important.
Right.
Sorry, I interrupted you. Yeah.
No, that's fine. I was just going to ask Lackler if he knows of any tools or things that are available that can help clients combat this sort of stuff and make the process a little bit more trustworthy.
Yeah, so our mission was, you know, starting Moselle to really open up access to financing and funding for small businesses that you might even be overlooked. And one of the things that Neil said that we look heavily at is the buyer and the supplier, and see who the supplier is, and then look at historical data and how much work, like how much goods have they bought between each other, and look at banking data. But on the Zoom call side of things, you know, a lot of people don't realize there might be inherent biases there as well. And so, you know, we try to look beyond into the future of where are unique ways that we can build trust. And one of the ways that we're doing that today is like really empathizing with the business owner and really getting into the weeds of their supply chain and optimizing it without thinking through financing just yet. And then when it's like, okay, now you need to, you know, look at these financing options, here they are. It's much more powerful for us because we're working alongside them, and we've have a strong relationship all through a digital platform. We're constantly talking with our clients and really understanding their supply chain. So having that data and then also the empathy and connecting it in unique ways.
So this question is maybe for Elias because you came from a bit of an insurance background, but one of our attendees has asked what our opinions are on using trade or credit insurance. Maybe we can start with you, and other people feel free to add in if you'd like as well.
Yeah, I think using credit insurance is a great idea in my opinion, because most people will only look at it as an insurance solution. And in a lot of cases, it's not just an insurance solution. Yes, you get paid if you don't, if there's a non-payment from your buyer. But in a lot of cases, you can leverage sort of the expertise of that credit insurer to be a sort of an outsourced credit management department for you, able to give you approvals on your buyers. So you can know ahead of time if you have the appetite to provide them with credit. And so I see it as well as a sales tool, because you can then negotiate knowing in the background that you can get approvals on these buyers. So my answer to that simply is that I would definitely explore looking at it, and you know, whatever the cost of it may be, you see if you can integrate that into the cost of that order. I
think Eli raises a really good point. So we build it in automatically into our finances, so all of our receivables are credit insured. And I think Eli said it well, it is a second check, you know, in the market. And actually, we would expect over the next 6 or 12 months on our platform to offer credit insurance separately on all transactions. You know, so a seller can do just that. They can do a credit score, and then if they want, take out credit insurance, because our service is non-recourse. So once we buy the receivable from our client, if the buyer goes bust, that's our problem.
Right. Neil, are you guys using credit insurance?
Yeah, so we credit insure all our transactions, and exactly what Elias and Ian said. If the credit insurer says no, then that's a good barometer for us that there's a problem with the transaction. So we rely on it, yeah.
So almost like they do due diligence before you guys do, or do you do them sort of in lockstep with one another and then?
Yeah, in parallel.
Yeah.
It's a parallel process, and sometimes you need additional information because there may not be a credit score or a credit limit on a particular buyer, even though it might be a household name. And you might have to go through a process of just getting information from that buyer, and then being able to assess it. And sometimes we would do that jointly. So it's very much a parallel process that we move in tandem.
I would add to that as well, actually, that I mentioned earlier that a lot of the little guys will come to us and ask for a huge trading limit, which is just unrealistic. So to get a credit insurer to back a huge transaction for a new start company is a big challenge.
Yeah, to that point, Lee, I wanted to just add, the credit insurance is covering you for the risk of non-payment. For us as purchase order financing company, we're financing it prior to the receivable being generated. So right. we won't finance just because there's a credit insurance, because there's a lot of things that aren't covered. Like if you have a dispute with your buyer, right? You didn't deliver what you were supposed to deliver. There's a lot of other risks. So credit insurance, just to be clear, is really just for the risk of non-payment from your buyers.
Right, and thanks for that clarification. We have 3 minutes left. Very quickly, my last question that somebody raised, and I think it's a good one. Has COVID actually affected the credit risk that you guys are taking on?
So it's certainly in some sectors it's been hit very hard, Lee. So travel, hospitality, the obvious ones. So and life remains very difficult for those guys there. So that's very tough. Other sectors have had a good COVID. Technology, a lot of professional services. So I think it really is about getting into the detail of the transaction and understanding who's involved and what sectors they're exposed to. I think also a lot of companies learned from 2008 that a blanket approach of saying no to everybody isn't very good for the economy. So I think both funders and credit insurers have been much more selective this time around, and so we've been able to get lines of credit and both credit and credit insurance, no problem. It's just more selective.
Okay. Anybody else want to add to that in the last minute we've got here?
Just quickly, in the retail sector especially was hit really hard, and so sometimes in cases where you're like, I'm selling to a big player, I don't care about credit insurance. It's still something to consider, because as we've seen recently, a lot of the major players have went bankrupt, and there was a lot of reduced risk appetite from the insurers on that.
There you go. Well, I think that's probably all we've got time for today. I think there's a few questions that we weren't able to get to, and I'll work with Danielle and the panelists to follow up on those. Somebody did ask about contact information for all of our panelists, and I'm sure that they'd be happy to discuss with you. I think everyone's company's got a webpage and a contact us button. I'll let Danielle chime in as to whether or not she gives out actual email addresses. I'm not sure that I'm allowed to do that. But I really wanted to say thank very much to our panelists. I could have asked you about 100 more questions, and I'm certain that the attendees feel the same way. So we might have to impress on the CLA to organize a follow-up to this and maybe do one post-pandemic and see if things have changed. But thank you again for attending, and I'm going to turn it over to Danielle now to close this out.
Absolutely. Well, thank you all for your incredible insight and to Lee for moderating such a great session. And thank you everyone who tuned in and submitted questions today. We invite everyone to become a member of the CLA and participate in the FinTech lending community. And to continue attending our upcoming events, you can find them at www.canadianlenders.org. We absolutely should do a follow-up session to this one. So stay tuned for that as well. And yeah, in terms of connecting with the speakers, you can find them all on LinkedIn. I'm sure they'd be happy to answer your questions. But with that, have a great rest of your day and thank you for taking the time.